Hey, what is going on, everybody? Tyler Carlston here with the Mortgage Accelerated Podcast. I am super excited to have on here the founder of Arcus Lending, Shashank Shakar. How are you doing, Shashank?
I'm doing great. How are you?
I'm doing fantastic. Super busy. How about yourself?
Just free all day. I was just waiting for this.
Appreciate that, man. So how's everything been for you? What's Arcus Lending been up to?
So we have been in a super fast growth scenario this year, as I've been mostly just producing by myself for about 9-10 years, and I wanted to personally get to a personal production of about 150, 170 million, and then went out and tried to recruit, and that's what we have been doing. We have been focusing a lot on expansion. We're now licensed in 14 states, so that helps, and we just brought over almost 20 loan officers. So that's been the biggest focus for 2019 for us.
That's awesome. That's good to hear you're focusing on growth. So how big is your team? Tell us a little bit more about that.
So again, as of until last year, in fact, early this year, we were just about 4 or 5 people. It was 2 processors, me and my assistant, and we were doing about 170, and we did $180 million last year. It was very a small team, just focused on my personal production. And as of this morning, we are about 30 people. So we brought in about 20 loan officers and support staff. So just over 30 people in last 4 or 5 months. And that's where we are.
That's awesome. That's some pretty substantial growth. So what numbers are you trying to hit with all these extra LOs that you're bringing onto the team?
Yes. So the goal was that, as in when you're a mortgage broker, really not that big in terms of size. For me, it was always $1 billion was in my head for last, say, year and a half, which is like, how do you get to $1 billion mark? Because if you're already close to 200 million, millions probably don't turn you on that much. It's about how do we get to that B number, so to say. And that's the number that I have in mind, and that's the number that the team has in mind. And initially we were like, okay, let's push for 2021 to get to $1 billion in origination for the year for the company. And I'm actually moving it up. We are actually targeting 2020, which is next year for that, which is almost $100 million a month, which is what we are probably doing in 6 months right now. We have to push that to a monthly volume. It's a huge amount of growth. It's probably 10x of what we do right now, definitely 5-6x. And sounds unrealistic, but I think it's still achievable, and that's the number we are going after.
That's awesome. I love big goals like that. I mean, there's really no limits what you can achieve. So,
Sure.
Shashank, why don't we dive into a little bit about your past? What got you into the mortgage industry to start?
Sure. I got into the mortgage business in 2008. I was a year and a half in the country. I was working in India. I moved to this country as head of business for a company I was working for. And then they shut their shop in 2008. They were in financial services. And as pretty much everyone knows what happened in that year. And then when they closed the shop, I was kind of a year and a half in the country. I knew 3 people at that time. And I was like, yeah, what should I be doing? And then because I was in the financial services before, I did a little bit of mortgages there. I'm like, okay, the only thing I know to do is mortgages. And that's how I got started in 2008 when 65% of the industry was actually leaving the industry. And of course, very soon I realized that it was a really bad move and not something I should have tried. And definitely something that I do not recommend. But yeah, that's how I got into business.
Okay. So what do you think, obviously, besides joining when everything was tumbling down, what do you think the biggest obstacle was for you when you were getting started?
So if you will see, if somebody gets in the mortgage business or say real estate business, your first line of defense usually is you go to your friends, right? We call it circle of influence or sphere of influence or whatever. You go to those people you went to high school with or college with or your neighbors and all that and say, hey, or your family and say, hey, I'm in the mortgage business now, send me some loans. And I did not have that luxury. As I said, I knew 3 people in the entire country. I didn't go to college with anyone. I did not have any relatives or neighbors, whatever, so to say. And so for me, the biggest learning or the biggest obstacle in the beginning is that, okay, I understand the mortgage business per se, but I don't know how to get clients. And so that drove me into finding newer ways and ways that most of the other loan officers were not trying. So I got into writing books or speaking or blogging or working on social media, which in 2009, all of these concepts were fairly new. In fact, I can count probably less than 10 people who were really blogging at that point of time. And so it was more out of necessity because I did not know anything else, and I was trying to see where are the new buyers and sellers finding their information from. And if I don't have a circle of influence, how do I build that brand authority where people come to me instead of me going to them? And so yeah, that was the number one obstacle, but also the probably the best solution I could have come up with. As in, if I look back 10 years of my career, I don't think I could have done anything which would have turned out better than that.
Yeah, I mean, you said the key word there is building brand authority, and that's really a huge thing. I mean, there's so many different ways to grow your mortgage business. I mean, you could go buy leads like what I do, or you can focus on building a brand. Now, building a brand, in my opinion, is more of a long-term play, because once you build that brand and establish that trust with your consumers, that very rarely is ever going to go away, and that benefit's going to be there for many, many years for sure.
It's the most difficult way to do business. I'll be very honest with you. And you rightly said that it takes years to do this. But it's also the most solid, most long lasting, and probably having most loyal customers that you can bring in. I really can't think of any other way in which you can build this long-term customer base the way I have been able to do that. And that too, probably in the most competitive mortgage market in the country. I'm in Silicon Valley, where the rates that I offer on my jumbo loans are 0.5%, if not higher, than say the rates other banks or other lenders can offer in this market. So it's not the price competitiveness that has kept me in the market. It's the fact that people treat me as an expert. People think that I'm the one who can help them buy that $1.5 million home that they are buying, even if I don't have don't have the best rate. So it is uncomfortable, as in going out to speak, writing books, doing blogs, things that I personally had never done before. English is my third language, so it was not easy for me to do all that, and it definitely took 3-4 years until those brand fundamentals were built. But once it's built, really, my main philosophy of prospecting, which was I don't want to go to the customer, I want customer to come to me, that has happened to me through my entire career and has built very solid long-term relationships with my clients, which keeps feeding me the business, which makes me, say, the top 15, top 20 loan officer in the country.
Yeah, so I mean, you mentioned that a lot of your customers come to you now. So does that mean that, because a lot of the industry, they do it the same way, they rely on the realtors to bring them business. I mean, they bring coffee, donuts, butter them up on the phone. That's the standard way that most people try to generate good business. So is there any of that going on with you, or do you strictly just rely on your brand authority to bring in new business?
So mostly, yes. I do not. I was always, again, I always did not want to be dependent on third-party sources to feed me business. There's nothing wrong with it. I love working with real estate agents. I have a lot of really, really good relationships with them. But again, if that business were to completely dry out today, I would not be losing sleep. Let's put it that way. It's because I've built a direct-to-consumer model in 10 years, which is at a point where I don't need to be worried about, hey, will a CPA refer me business, or will a real estate agent refer me business? But when they do, I take good care of them. I take care of them in a way which is, say, so much better than, say, most of my competition, so that they keep sending me business back. So one way is that, am I dependent on them for my production? No. But if they give me business, then I need to show them what differentiation that, say, Arcus Lending brings to the table, which gives them the confidence to maintain that relationship with me and keep sending me business. And that's how my business is structured right now.
Yeah, and of course, I mean, with people coming to you, most of the time, if they're not working with the realtors, you can always shell those out to your favorite ones, and they're going to appreciate that and send you more business in return.
Absolutely. So when I meet with a new realtor, again, that's one of the things, is that I tell them, hey, I want to keep the relationship equal, in the sense that it's not a case of course, as a loan officer or as a broker, as a lender, I'm expected to close in time and give them good service and everything else. But I want to go one step further and actually refer you back business. Because of my direct-to-consumer model, you're true. You're right. That happens all the time, is that I get the customer first, not the real estate agents. And this is also because I continuously drive home the point is that why getting pre-approved is more important, or should precede you looking for homes. If you keep sending out that business, then the future home buyer knows that, oh, I need to get my financials in order first before I go and look at that shiny, say, countertop. And that's not something you should be doing. And I understand. See, it's more glamorous for a home buyer to first go look at those things than work on boring numbers, right? Who wants to get a mortgage? It's just a means to an end for them. But that's the message that I've been driving on everything that I do, as whether it's blogs or books or TV shows or radio or podcasts. Everything that I do is that because I truly believe that if you don't do that, then you're doing disservice to yourself and to your real estate agent, because 3 months of everyone's time and then you're not qualified or something happens. So because of that, yeah, I get a lot of leads where there are no real estate agents in the transaction at that time, and I'll be able to refer that out to somebody and build even a stronger relationship with that person.
That's awesome. Yeah, I agree with everything you said there. So is there any weird way, like non-traditional way that you use to get business that we haven't talked about?
Do I get non-traditional way in which I get business?
Correct.
So as in pretty much everything I do is technically non-traditional. How many loan officers would you know who do business the way I do in terms of the prospecting that I'm saying? And that's not to put down anyone. Every single source of business, if you work hard at it, and that's how, and if it works for you, is I think every single channel is very useful and very relevant, and it's something that if it works for you, it's great. But when I say non-traditional, I mean things that I have done in the last 10 years, and that's what I was looking at in 2009. Is that, look, if I go to a networking event and try to work with real estate agents, 10 other loan officers are doing the same thing. And they're asking these real estate agents to send their business. What is the differentiation that I bring to the table, which is different than all these people? And that's why I got into finding everything which was non-traditional back then. As in, even now, 10 years later, how many loan officers do you know who writes a blog every single week, for example, or has his own radio show, or has his own TV show, or writes books and all that? It's because these are not easy to implement. You can't just wake up tomorrow and write a book. It does not happen that way. It's a long-term strategy, and it works better than any other strategy, at least for me. But I still call it non-traditional, because if it was that traditional, then say 10% of the loan officers would be doing this. And as far as I know, less than 1% does it.
Yeah, I agree with you. I mean, it's not the quickest way, but once it's established, it's a very powerful tool. So Shashank, as you know, the broker market share is obviously growing. It's expected to be hitting close to highs probably sometime next year. So that means a lot of retail loan officers are going to be coming back into the broker world. What advice do you have for people making that transition over to the broker side?
So if you'll see, every industry at some point of time, and sometimes multiple points of time, goes through what I call 3 Cs. So you have the cycle where the industry goes through chaos and then consolidation and then calm. If you'll see the mortgage industry, 2008 is when everything was chaotic, right? We had 2008, 2009 of chaos. And that resulted into consolidation. A lot of top lenders, top 10, top 20 lenders that's there, they are either non-existent at that point of time, or they were very small players. As in, if you look at companies like, say, Quicken Loans or United Wholesale Mortgage or Guaranteed Rate, or you would not have even imagined back then that the top 2 lenders in the country would be non-banks. Who knew that Quicken and UWM will be fighting for the #1 spot? Everybody thought it would be Wells Fargo and Bank of America and Chase, because everyone wants to get the mortgage from a bank. So that was the chaos that kind of led to the consolidation of these top lenders. And then we had a calm of a few years. So 2011 to, I would say 2016, 17, we didn't see too much stuff moving. And then last year, the industry kind of is again getting into that chaos cycle where things are changing again. Mortgage brokerage is playing a huge role in disrupting that consolidation or the calm phase which was there. Everybody had kind of ruled the mortgage brokers out with 5-6% market share. We're up to about 15, looking really close to it, 20, maybe next quarter, definitely by the end of the year. So they are playing a huge role in bringing that chaos back in a good way to the industry. Of course, the direct lenders are kind of losing market share there. And the other change that we are seeing, which is contributing to the entire chaos, is all the digital mortgages that we are seeing, as in companies like, say, Loan Depot or Rocket Mortgage or Better Mortgage or even Amazon, as in they partnered with Realogy, and they might be looking at a shot at mortgage industry next year. So all of this will again result into consolidation. We'll most likely see the broker market share gaining over the next couple of years, more digital play in the mortgage space. And then we'll see consolidation and again that calm a few years before we go back into chaos. So that's a cycle that I think the mortgage industry has gone through and will go through. So if you are a loan officer, say on the direct lending space, again, I don't want to completely discount you, but the model just does not seem to be working. There might be some exceptions, but the 4.5% and 5% rate, because there is a branch manager and an area manager and a regional manager and a vice president and an owner, and everybody needs to get paid on that. And you have big offices and you have huge support team. All of that model is really not going to work. And that's why you will see that even with, say, 180 million production, I was like 4 people, right? Keep my fixed costs low, very small team. And that's where brokers have the advantage. They have the local market knowledge, they are low on fixed costs. We don't have underwriters and secondary and risk, all of that on our payroll. So we can give that pricing advantage to customers in most cases. So yeah, if you're a loan officer looking for a transition and you moved, is that understand that all the luxuries that you have in the direct lending world, and I just hired 20 loan officers from direct lending world. I gave them the same message, is that, look, I'm not going to give you super large offices and you won't have 5 people supporting 4 loans. Now, those are the kind of luxuries if you're expecting, I'm not going to give you that. But what I'll give you is that is great pricing. I'll give you some amazing processing. You'll have amazing turn times. You will have multiple lenders to pick from. You'll have multiple products to pick from. So all of that really contributes to origination and production is what the brokerage world brings to the table. Everything else that does not is just merely a fluff and a pad-on to feed somebody else through the chain. We are not there. If that's what you're looking for, I don't think that's a good fit.
Yeah, I agree with you there. So, Shashank, I always like to ask this question. If you had complete control of the entire mortgage industry and you could make one change tomorrow for the whole industry, what would it be?
I'm a huge fan of Amazon Prime like model. And I speak about this a lot, and which is that if I could fix something, and I've been talking about it for not yesterday, but 6, 7, 8 years. I used to talk to CEOs of large companies, and I used to tell them the same thing, is that, look, it's a complicated product, all right, but there is no way that we cannot fix it where the operations is so strong that you can have predictable results. So the problem is that right now, the entire mortgage experience is so full of anxiety, and even we see the reports all the time, right? There are 20 million people who can refinance, but they have not refinanced. Why do you think that's the case? It's because they're done with taking a mortgage once, and it went so bad, they're like, I know I can get 0.25% lower rate, but I don't want to go through the entire process again. Imagine if you had the same problem in ordering a stuff from, say, Amazon. Like, okay, I know that I need this stuff or whatever. I would prefer that I have this, but who will go through this entire process? You have to go to the post office and buy some stuff. So what did Amazon do is that said, hey, every time you order something from Prime, we guarantee that 2 days from now, it will be at your doorstep. And 99.9% of the time, they deliver on that. That's the kind of experience I want the borrowers to have in the mortgage industry. Is that it will take 30 days, whatever. Of course, we can't deliver a mortgage in 2 days. It'll take 20 days or 30 days, but it's like 99% of the time, can we be predictable? Can we guarantee that? Can we say, okay, you are closing in 29 days, we will close in 29 days. So if I had the magic wand and then I could change everything or one thing within the industry, it will be the predictability of the mortgage delivery experience, which really lacks right now in the industry.
Yeah, I like that. That would definitely be a good change in my opinion. So, Shashank, obviously, like you had said, you're one of the top producers in the country. So I'm dying to know what drives you to work so hard? What makes you get out of bed every single morning and just put in 10, 12, 14 hours days every single day?
Exactly what I said. Even when I came in the industry in 2008, as in, of course, we were going through for the next 2-3 years, we were going through the entire foreclosure experiences of, as in we saw the highest rate of foreclosure that the country had ever seen. And it's and even then it was like, why is the mortgage experience like that? Why is there no education? How come these people did not know that there was a negative option arm which will do this to them? And that kind of drove me to blogging, and all the education that I do is that the future generation of home buyers, and that's why I focus so much on first-time home buyers and not other kind of customers, is because I want to educate them, saying that they don't make the same mistakes which, say, the last generation did. The home ownership is the biggest American dream, and it should stay that way. It should not become a nightmare. So for me, having that the team, the operations, the education back to the borrower is for me the biggest driver. And even say 10 years later, I still say blog once a week or I still get on shows like that, is because I think the more I'm out there in one form or the other, the more I'm able to educate customers and make the right decision for themselves.
I love it. Well, Shashank, I do appreciate you coming on. I bet every single person who tuned in got a ton of value from this. Like I said, I appreciate you coming on. Is there anything else you want to say before we hop off here?
No, I'll just finish with what is kind of my favorite thing to talk about, which is we talked about all the things, and I'm sure all the viewers get a ton of ideas from all the other shows and events that they go to. But one thing that I really want to talk about is that every idea that you get, or every person that you talk to or you read about, wherever you get those ideas from, don't go about trying to look for a ton of ideas. Most likely you already know what you need to do to get to the next stage of your business. I can throw in 500 loan officers in the room, and if I ask, hey, do you know the 3 things you need to do today or the next week or the month after to take your business to the next level, I can guarantee you that 490 of them will say, yes, I do. So it's not so much about that people don't know what to do. It's the fact that they don't take actions on those ideas. And my number one reason for success is not because I blogged or wrote book or spoke or did all of that. Those are just tactics. Those are just ideas. Those are just strategies. It's the fact that I acted upon them, even if those were so uncomfortable to me to begin with.
Yeah,
and that's what I tell to every single person watching it, is that I implore you that's what you should be doing. I'm imploring you that if you take actions, even with 2 or 3 of your top ideas, sometimes even just one idea, that will completely change your business versus looking for new ideas all the time.
Yeah, my biggest thing I always say before we get off here is just take massive imperfect action every single. It doesn't have to be perfect. It doesn't have to be planned out perfectly. Just make some type of action, and it's just going to be a compound effect where every single day, if you keep doing that every single day, whatever you desire is going to eventually come true.
Sure. Very well said.
Awesome. So again, Shashank, I appreciate you coming on, and I cannot wait to talk to you again in the future. I wish you the best. I know you're going to continue to grow, and I can't wait to see where Arcus Lending is in the next year and a half.
Thank you so much for having me on the show.
Yep. See ya.